What is up, Trust Engine Mortgage Coach community? I am hanging out with KP. We just had breakfast, also known as Kevin Peranio. What's up?
How you doing?
So,
My breakfast, my intermittent fasting.
yeah, so if anybody doesn't know who this guy is, make sure you follow him on LinkedIn. He is truly one of the most valuable mortgage leaders on LinkedIn. And by the way, dude, thank you for all that
thank you.
value. You are, like there's a lot of people that do social media for busyness and they're losing money. You do it for business and you really create value for the mortgage industry.
I appreciate it. Yeah, they're fun to do. It's how I felt about your Facebook community you built years ago. You know,
And YouTube.
I know, but like when you were on it originally, it was Facebook. It was way back, you know, and you tactically tell originators, you know, hey, here's something you can do, here's something you can work on, like what we're going to talk about today. Like these are things that originators can do and actually implement, not just using the tech that we all talk about, but also just their everyday activities and habits. And so, thank you for being a thought leader, brother.
I love what I do, love being valuable to mortgage professionals. So guys, the audience that we're going to communicate with right now, if you're a loan officer, you're in the right place. If you're a producing manager, you're especially in the right place. You are the MVP because you, one, do production, two, hopefully you lead and elevate others. If you're a regional leader, you're in the right place. And if you're head of production. So let's speak to the street, distributed retail, referral-based mortgage professional. What we're going into, we're doing this on the 23rd. We just had lunch together to catch up. Thank you for making time. What are the biggest opportunities for both management and let's talk to the producing manager. If you're a producing manager, because they're a player on the field and they're a coach, what are the biggest opportunities?
Well, I think 2 years removed from ChatGPT, right? You know, like we've been talking about AI, but I actually think you're going to see it be implemented this year in a very meaningful way. So what I would say is everything is going to accelerate at that job, especially the producing, branch manager. I think that everything will accelerate next year. Not necessarily rate driven, although I do think, we both agree that rates are generally going to keep trending down as they have. We had, 1 quarter up Q1 and 2 quarters down, and now we're having a quarter up. And
what's the box? What's the rate box for 2025 according to KP?
Well, I think where we just went with this week and with the 10-year Treasury, in my opinion, that's kind of the high end of the range for the year.
So high sixes.
Well, right now it's like 7.3%.
So low sevens.
So
to 6.2.
I
think we get into the fives.
I think it just swang 100 basis points since the first Fed rate cut in September, and so I think that can all swing back completely, and then maybe a little bit more as inflation softens going into next year. So, this is funny. Everyone talks about the Fed and inflation. You know what the driver of inflation is fiscal policy. So is our government going to be bigger next year, or are they going to try and shrink government and or deregulate some areas to put more money in the private sector and get the flow of money going? I mean, the biggest driver of inflation is high regulation and high government spending. And so I think most people think both of those are going to generally improve or at least slow the pace of the growth that it's been at. And I think that will bring inflation in line. So again, I think we could have, potentially high fives by the end of next year, as an average, 30-year fixed rate. So, but yeah, I mean, I still think AI is going to accelerate everything.
And what does that mean? If you're a loan officer, if you're a producing branch manager, give me a tactical. Okay, that's high level. Give me in the trenches. How's that going to help me do more loans, make more money?
So I bracket AI for sales in 2 different areas, right? So the first one's kind of obvious. It's like lead setting, appointment setting. Let's call it AI voice. Okay, so it's out front. I think the industry is very fearful of that right now, although I'm not. I think the laws are pretty clear. Say you're a bot. If you're a bot in the States, you have to say you're a bot in. You can't do unlicensed activity because it's not a licensed agent, right? So you can't ask for social security numbers. But you can collect a lot of information on a loan app. Can't talk rate, can't talk product. That's easy.
So voice assistant.
A voice assistant.
Okay.
That is making outbound calls.
LP1 voice assistant.
Yeah, that is making outbound calls, not just inbound calls. I think we're going to get there this year. So I saw a transcript of a
Time out. By the way,
yeah.
if you are listening to this and you agree, put that in comments. 2, if you know a company that's doing that, put that in comments. I'm tracking some voice innovators in the mortgage space, so let us know what you think and if you know someone who's doing that.
I'm a big time ROI guy, so imagine getting, for every single, that producing manager, like you said, imagine everyone on their team getting back an hour a day. Like, that's massive lift. Okay?
That would be rad.
So I saw a transcript of a sales call where an AI agent made an outbound call, talked to this lady in Palm Springs for 13 and a half minutes. She's talking about her 2 dogs and her job, and she works at the restaurant, how much the house means to her. And I mean, don't get me wrong, like, we love that stuff, but that's 13 and a half minutes you could have got your life back, right? Let the bot have that conversation.
Well, and it's a whole lot of calls that could have been happening that you weren't making. So it's not even 13 minutes. Like, the scale of that, think of the partnerships you have with realtors where there's just so many leads that the distributed retail loan officer doesn't call them.
Yeah.
Or think of all the data opportunities that loan officers just don't call. And now you could literally, like, speed to need. Like, we can call those things in AI time. So there's a lot of value to that.
Yeah, so I'm a big fan of that. And then the other classification, which I'd love to hear some names of some vendors for the AI kind of file assistant, right? So we've all talked about income analyzers and OCR and document indexing stuff, but like something that reads everything that comes from the borrower, and I think that being ingested in our processing, origination, and LOA, loan officer assistant, like kind of duties, will help us hyperscale. I mean, talk about, imagine seeing something that reads 12 months bank statements and compares it to the product guideline, and then sees that there's a mortgage payment being paid somewhere in the line items at all 12 to 24 months of bank statements. There's this payment, then cross-references it to the credit report and sees that that payment for a mortgage is not on this. So now you have an undisclosed liability, and it does all that in like a millisecond. Like, what
That'd be
kind
cool.
of time? Yeah. Well,
That'd be cool.
Well, I mean, I'm on a demo call as soon as we hang up with Friday Harbor. That's the best one I've seen.
Check out
there.
Friday Harbor and FridayHarbor.com.
I guess.
Probably not.
I don't know.
Google it, Friday Harbor AI, and let's see what it is.
But there's other tech, and we're still evaluating, and we're doing a lot of demos, and we want to see where it's all going. And so I think that will speed up the branch. Imagine how many processors and loan officer assistants do we have on our teams, and they're not fully utilized. But you can't get rid of them because like you need at least one, right? And I'm not saying the point of the software is to get rid of them. I'm saying the point is when you implement these things, now you can keep them busy full time.
Yeah, you could you could be faster. You could deliver a better customer experience at scale.
Yeah.
So what about this? You and I talked about the rates, and I do think refis are an incredible opportunity in 2025.
Huge.
I'm going to put them at number 3 because one, we're not in the money at a rate and term refi perspective, and while I do think debt consol are huge, I think there's a bigger opportunity. But if you are a producing branch manager and you do not have yourself and your loan officers with strike rate pricing with your folks, you should. If you're not using Trust Engine, you should, because here's the deal. There are some loan officers, when rates made that dip, was it September?
Yeah, up through September, yeah.
That killed it. And there are a whole lot more loan officers that took apps but didn't get them locked, or they didn't have it together, and they either did nothing or they did a little. So the difference between those who won and those who lost, it was like a 90% loss, 10% won. Don't be in that column next, but let's call that opportunity number 3. What do you think about this? One thing we know for sure, like on January, whatever the first business day is, over 50% of people with a mortgage starts with 2, 3, or 4. Mm-hmm. Many of them are eligible to move up. Mm-hmm. Many of those people want to move up, so there's a high propensity that they want to move up. To be really good, it's showing those people and giving them clarity. This is how you could do it. This is how you could go from 4 to 6, and show it to them in a way they're like, I'm going to do that. I'm going to list my home and I'm going to move up.
I've been saying for 2 years, don't sleep on the existing homeowner that's got a low interest rate with a 2 or 3 or 4% handle. They have been gaining equity every moment that passes, and they are all almost always willing to trade all of it when they sell their house and put it down on the next house. It's like 75% of home sellers buy another house. They're a home buyer. So it's not just about rate. I mean, there's pent up demand, and so I love the fact that you guys are thinking of ways to present to your agent. Here's how you cultivate not just a listing when they sell as an existing homeowner with a low rate, but you're also going to get them on the buy side, and then the loan officer, the originator, they get a chance to do a loan. And so, like you said, it's a trifecta. And so I think marketing around that, marketing specifically to existing homeowners, I think the time is now, because instead of just waiting for them to call you, you should show them the benefit. When rates are here and your rate's there, but you have all this equity, like they need to visualize it and think of well, the payment's about the same, or maybe it's, and by the way, they won't be burdened by taxes and insurance like a first-time home buyer would. I'm not saying they're not burdened, they're unburdened, but they're used to it going up. They're already paying for a home, so they're paying for that along the way. And so for them, it's kind of like, here's an idea. Shit, you're already paying for more taxes and insurance. You might as well get a better, badass new house, And by the way, just because you're at 3 doesn't mean you go into 6.5. You can't have around the same payment. And so, you know what I mean? So
yeah, and here's why I love it. It's, first of all, realtors will love that. That's a listing and a move-up buyer. And I'm going to put a link down below. I interviewed a loan officer by the name of Patty Newby last week. She's with Lower. She's out of Dallas, and she did how she helped someone go from 4 to 6. Column A was, this is what you have. Column B is your move-up house. Column C is like, hey, what if you wait for rates to come down? What are values going to do? They're going to go up. So it's kind of like, do you want to buy now? And then she showed a column with, you can refinance. When rates come down, we'll refinance you. So she literally gave that person clarity. They could see their net worth increase. They could see the cost of waiting. And they could see that, hey, I can get my cake and eat it. I can move up now, and then I can refinance later. So I'll put a link in comments to a little clip on that in the full interview, Patty Newby. Check it out. What about this? First-time buyers. What percentage of folks right now at PRMG are first-time home buyers?
Well, that's a lot of what we hunt for. So I would say the national average is about 32%, 30%, right around there.
And you guys?
I'd say it's half our business.
Half. So do you think that would be a big opportunity in 2025?
I do. I think as rates come down, we're already starting to see, for example, here in California, Farmers is getting back in the insurance game.
I thought Farmers was getting out.
No.
Maybe out of commercial. Out of commercial.
Yeah. They've been out. They want to get back in resi. So,
Okay.
like I said a year ago, if we have a okay fire season, they'll come back in because they basically just pause for a year, try to get insurance in their book from the rest of the country, and not have to pay a bunch of billions in fire damage. We had pretty light fire year. Hurricanes, not so much. That was kind of tough. I own property in Florida, South Florida. It's what
Rough.
it is. It's rough.
Sorry, bro.
It's all good. But no direct hits, thank God. And I know a lot of us have dealt with it. But insurance could be kind of a surprise reprieve, and in cost this year. And rates are continually trending down. I know at the moment right now they take a little spike up. But I don't know. I'm pretty positive about next year. This is a great year already for us.
Yeah,
next year should be better.
I'm excited. So last question. So with my new role as Chief Growth Officer, my obsession for next year is not only adoption of technology, but adoption of best practices.
Yes.
I have this thesis that the wealth gap in the mortgage industry, it's widening. The loan officers that are implementing technology, implementing best practices, they're winning. They're winning even in a tough market, and it's just going to broaden. Any thoughts you have on how to get adoption of both tech and best practices for loan officers? Top strategies.
Well, I'll just say that I echo that, and when I talk about AI being an accelerant, I mean, I don't know if you saw this screenshot that's floating around at our peak we had 455,000 licensed originators.
Yeah.
And so far this year only 93,000 have renewed. Is that true?
I didn't know that.
I thought
Have renewed. I've seen a number where 93,000 did one or more loans a month. I think it's 90,000 are actually doing loans.
Yeah, I wonder what the total number is.
So by the way, Kim Perry, if you're watching this, or whoever knows how many people have licensed Put that down below.
Yeah. I've heard 43% from the peak are out. I've also heard as much as 50. But my point is, that is evidence to your point. There is a widening wealth gap amongst originators. There are the haves and the have-nots. If you're just some little phone jockey at a refi shop and you come in, you're reading scripts, you're not that valuable. That can be automated. But if you're cultivating relationships and business in the communities with real estate agents, with tech and driving habits and adopting, whatever's new coming along the way, AI or whatever, then you'll continue to be the cream that rises to the top. And so I agree with that. So what I would say, this is what I've been saying for a little while, I think if you're going to adopt a new technology, just pick one. Just pick one. You go, you know what? I really like this thing that I'm going to work on, in my business. So, whether it's Trust Engine or it's MortgageCoach or, that piece of it within the whole platform, right? Or it's some other, thing out there, just master that or get really good at that or proficient with that, then go on to the next one, because it can be overwhelming when you talk tech and habits. It's like, I got a CRM, I got a social selling thing, I got this, I got that, where do I start? I'm just gonna make phone calls, and then you don't actually do that either. So
yeah, no, you got to be focused. And my job at Trust Engine is obsessed with loan officer adoption, and the way we've built our tech platform, it is built to help improve the adoption of your CRM and of other technologies. So check it out. Any closing thoughts, bro?
No, I'd say don't sleep on non-QM. I still think that that's going to grow this year. It's a great way to cultivate new business, and pretends to be a refinance later. And other than that, we've got a lot to be thankful for this year, and it was better than last year, and next year will be better than this year. So what else could you ask for? Life's good. Cheers.
Well, I'll try to get this posted either today, no later than tomorrow. So Merry Christmas. More content like this. I'm going to be doing
Merry
a whole.
Christmas-ka.
There you
It's
go.
Hanukkah and Christmas on the same day.
Merry Christmas. Christmas. And I'm going to try to get more content around how to thrive in 25 and what are the top opportunities. So if you want to share what you think some of the best opportunities are, I know I interviewed Amir Saeed on Friday, and he made a really good case that financial advisors is a top strategy, and he talked about why it's so important, and he talked about how. Put a link down below, but what do you think are the top opportunities to thrive in 25? Thank you, brother.
All right, thanks, man. Cheers.
What is it again? Chris Hanukkah?
Christmas.
Christmas. Happy Christmas. Take care.